China's economy is sick. Entire cities are being partially built and half finished for the pandas of the world. Property builders have been stockpiling borrowed money from extremely reliable and regulated banks, so money has never been an issue. People are paying for homes fully in cash before the building has even been constructed. Their stock market sucks. Young, bright-eyed, and bushy-tailed students are unable to get jobs. Exports are steadily falling, and their currency is absolutely decimated. Oh, but don't you worry, BRICS is ready to take over with their very own reserve currency of the world. Oh man, buckle up because this is gonna be a good one. China's economy has been the poster child of economic growth for the last 20 years, the fastest growing economy on the planet over that time span, claiming the number 2 overall spot today. However, the last few years in particular haven't been so rosy. As you may already know, China relies heavily on its real estate sector, accounting for 30% of its total GDP. And when I say relies, that may just be an understatement. China's housing sector is actually the single largest asset class in the entire world, 1.3 times that of the US housing sector and nearly 2.5 times the US stock market, and therefore regarded as the most important single sector in the world's economy. Just know all these stats and headlines to say real estate is really important to China. So, what's the problem? Well, as you may remember, investors and Chinese homeowners alike were not too happy when Evergrande defaulted on more than $300 billion of debt in 2021, and rightfully so. After all, Evergrande was China's second largest property builder. Unfortunately, things haven't gotten much better. Actually, China's largest property builder, Country Garden, was unable to pay debts due on August 6th. Oh, but don't you worry, China was able to extend that deadline for him, buying some time before future defaults. So the two real estate giants in China are severely underwater. But how in the world did they get all the money to build with no bounds in the first place? Introducing the beautiful world of shadow banks. About as sneaky and convoluted as an internationally realized industry could be. In fact, the shadow banking sector in China is worth over $3 trillion, about the same size as Britain's entire economy. What is a shadow bank? Well, simply put, it does what a bank does. It loans and holds your money, but with far less regulation and oversight than traditional banks. Naturally, then you may ask, why would you ever go through a shadow bank? With higher risk comes higher reward. Shadow banks are able to dish out cheaper financial services, better interest rates on loans, and require much less capital up front. In other words, more affordable and accessible for Chinese citizens and businesses. These banks have come to the rescue. In times of default, they're willing to put up capital to invest in some of these unfinished properties that Evergrande and Country Garden are no longer able to finance. I'm sure you can start to see how this may be potentially dangerous. May I remind you that Lehman Brothers, one of the infamous financial institutions to collapse during the Great Financial Crisis in the United States, was a shadow bank. In fact, shadow banks are typically referred to as non-bank financial companies because it doesn't seem as sketchy, and include institutions like hedge funds, private equity funds, mortgage lenders, and large investment banks. So just know it's a risky business, but has contributed to China's spectacular growth over the past 20 years. They are able to lend out money with virtually no regulation or oversight whatsoever. The ability to loan out infinite money has certainly allowed shadow banks to drive the growth of large property builders like Evergrande and Country Garden in the past. But now that the companies simply don't have the money to pay back their debts, the shadow banking system has potential issues on the horizon. Well, what's the worst case here? I mean, it really doesn't matter that much if projects are left unfinished, right? Yeah, maybe it's a waste of space, money, and materials, but as long as the people don't get screwed over too bad, it's not that horrible, right? Well, actually, here's where it gets even worse. Take Chen Peng, for example. He actually already bought his home, but unfortunately, it isn't quite finished yet, and he's not happy about it, as he clearly directs his toothbrush at the camera. How about Tang Chao? Him and his wife have put down $40,000 on their apartment, but months past its scheduled completion, a concrete shell with wiring protruding from the walls and piles of dirt on the floor was all there was to show. Oh, and unfortunately, him and his wife broke up. Sorry, Tang. Daisy Zhu paid $495,000, overly excited to move into her new apartment, something she has been saving for the last 8 years. However, this was 9 months ago. Daisy's apartment building is a part of an unpainted 16-story building wrapped in green netting and surrounded by weeds and debris. You starting to see the trend? Yeah, in China, 90% of homes are bought before they are built, and with thousands of projects indefinitely halted, people have already paid out much of their savings. You see, in China, owning your first property is virtually a social necessity for an adult, and they don't do it on their own. Friends and family are expected to help out and loan or give you money to make it more affordable. Take Yi, for example. For her first home, she made a down payment of $20,000, most of which didn't come from her pockets alone. This is a much different societal expectation than in the West, where essentially you're expected to go out on your own, finance your home, and pay for it over a long period of time. 30-year mortgages are the most popular way to finance your home. In China, you are expected to dedicate 65 to 75% of your total wealth to housing assets, much different than that of the 30% rule of thumb in the United States. Household debt to GDP ratio, basically a way of looking at how the homeowner is in the event of a real estate crisis, has been steadily trending up. Unfortunately, in the United States, this didn't play out so well. Bringing this back full circle, homes are the most sought after asset in Chinese culture and are most often bought before they are even constructed. Financing looks very different and requires an extremely large financial commitment up front. So this becomes rather problematic as housing construction projects are indefinitely halted. 75% of Chen Peng's wealth is now tied up in an asset that simply doesn't exist. Nice. Okay, so we can start to see how the crumbling real estate market combined with the reliable lending of shadow banks could be rather problematic for Chinese citizens and businesses. But what about the stock market? If 3/4 of Chen's wealth is tied up right now, he has to go somewhere to get returns. Could he invest in the stock market? Nope. The Shanghai Composite Index, essentially equivalent to the S&P 500, but for China, sucks. It's currently at the same levels that were seen in 2007. Oh, and don't forget that REITs, a real estate investing device, and other real estate stocks are on the index as well. So that may just be a factor for overall underperformance. And not to mention that the Chinese Communist Party, let's just say, doesn't like when large companies get too powerful. In other words, when companies like Baidu or Alibaba create innovative technology that makes people's lives easier and improves standard of living, you can bet that the CCP is there to step in and save the day. So good luck investing in tech companies that have to deal with constantly looming financial penalties. Run, Jack Ma, run! Before we get into some of the other looming problems, I ask you to subscribe so Chen Peng can finally move into his house that he paid for 8 months ago. Do you care at all? Do you have any humanity, any decency to help this man out? Click this button, or let me know why you don't care about his situation in the comments down below. Thanks. So to quickly recap, the average Chinese citizen is already getting screwed by the real estate debacle along with a poorly performing stock market, but there is more. Bright-eyed, bushy-tailed students leave university in hopes to find their first big job. Unfortunately for them, this year is probably one of the worst ones ever to be on the job hunt. Youth unemployment has hit a record high of just over 21%. With all the economic uncertainty surrounding the real estate shenanigans, businesses are particularly hesitant to hire. Slowing economic growth almost always results in a slowing of hiring too. In response to this, President Xi Jinping has been extremely sympathetic and helpful to students going through this extreme hardship. I had you for a second, didn't I? No, actually, Jinping has told students to eat bitterness. In other words, suck it up, shit happens, stop crying about it. telling officials to, quote, systematically guide college graduates to rural areas. And don't worry, kids, young people should be happy and grateful for this opportunity. They will make a killing by delivering meals, recycling garbage, setting up food stalls, fishing, and farming. At least that's the kind of propaganda being put out by these Chinese government-controlled media outlets. Ms. Zhang graduated last year with a master's degree in city planning and has sent out 130 resumes with no job offers and a few interviews. Guo, a data analyst, was laid off and has tried delivering meals as the industry was promised to be very high paying, like Jinping said. Well, no, he was working 11 to 12-hour days, making a little over $700 a month, barely making ends meet. I guess he just failed at eating bitterness. Stephen graduated from a top UK university with a master's degree in the STEM field. However, after endless job hunting, sees no future for himself in China and believes that his best way out is to run away from the country. Also, I forgot to mention, China just recently suspended their report on youth unemployment when it was at an all-time high. Alright, we all know that China isn't the most transparent when it comes to giving out good information, but come on. Right when things get bad, it's time to stop informing people about what's going on? So the housing market, the stock market, the job market all stink. The economy stinks. But what about exports? After all, China has been able to rely on their manufacturing and export dominance to drive economic growth for the past 10 years. Nope, exports have been steadily declining, and keep in mind this makes up about 1/5 of China's overall economy. What about their currency? As long as they can maintain relatively decent pricing power, their position in the global economy is still strong. Nope, the USD yuan pair is at 5-year lows as citizens, organizations, and countries all across the globe begin to lose trust in Chinese banks and their overall financial system. We all know how important it is to maintain a strong, trusted currency, and if you don't, check out this video because there are some pretty dire consequences. The yuan makes up an extremely small percentage of international reserves. But don't worry, BRICS, a squad of countries with extremely level-headed and highly trustworthy leaders, are coming together to solve this issue and create an international reserve currency of their own. Putin is sick of being financially extorted by the United States and concerned about their overall firm grasp on the world economy. On a serious note, there is some truth to this. The US has weaponized the US dollar. The US has the power to levy sanctions and taxes on foreign nations at their own discretion, and this has become a major problem for countries like China and Russia over the years. So their solution: bring a band of brothers together to encourage de-dollarization. In other words, stop using dollars so the Chinese yuan and Russian ruble can become stronger. There's just one problem. Because currencies today are so highly dependent on the trust put into them, I just have this feeling that Chinese and Russian currencies may not be the most reliable. And the data proves this. The United States is required to be transparent about all economic activity. And everyone knows the US system is certainly not perfect, there's plenty of corruption, but it's certainly better than all the falsified data that leaves Chinese media outlets on a daily basis. Yeah, okay. Oh, and one of the BRICS allies, India, also met with the United States recently talking about some sort of an alliance and something about how they are indispensable partners. Interesting. Maybe China should double check which side India is pulling for. In conclusion, our good friend Chen doesn't have a particularly good reason to be content with his current situation in China. But lucky for him, there are some bright spots in the Chinese economy that nobody is talking about. Dominance in the steel industry continues and is projected to continue well into the future, albeit prices have come down significantly since 2021, but seem to be stabilizing and potentially near a bottom. China absolutely owns the electric vehicle market right now, and Goldman Sachs projects that the percentage of vehicles that will be electric is set to balloon over the next decade, ultimately leading to more prosperity for EV companies, especially those in China. With the now second largest population in the world, that makes for a lot of new potential customers. AI innovation is continuing to move in the right direction, with some of Baidu's latest technology technology rollouts. But keep in mind, big tech companies like Google, Facebook, and Nvidia are limited or straight up banned in China. So they'll have to continue making progress on their own. Stock buybacks are at a 20-year high. In other words, executive confidence in a stock market recovery is high. And the government is taking steps to revive the economy by cutting trading costs, supporting stock buybacks, and encouraging long-term investment. At least that's what we're hearing from the old reliable news outlets. With all this being said, the reality is China is certainly navigating over very thin ice. Eventually, the time will come when Country Garden has to repay their debt. Shadow banks will have to come up with a lot of cash, and people need their homes that they already paid for to be constructed. China is a country with a lot of smart people, ranking consistently in the top 5 countries in the world across multiple scales evaluating intelligence. So technological innovation and their status as a top economy and overall world power is nearly guaranteed. However, they find themselves in a sticky situation right now, but as one great Chinese ruler once said, eat bitterness. What doesn't kill you makes you stronger, right? I hope you enjoyed, and I'll catch you in the next one. Peace!